G'day folks, welcome back to Pete's Investing. It's 17th of May 2024. This is the platinum, copper, crude oil and iron ore update. And we've got a trading strategy for you as well. First off with the heat map, you can see there at the top left, we've got the platinum, crude oil, copper and iron ore CCI 150 trends. On the monthly, we're predominantly bullish, with the exception of iron ore, it's neutral. Likewise, on the weekly, with the exception of crude oil, it's bearish on the weekly, and bullish along all time frames on the daily for all instruments. And you can see there the other instruments we cover in various other videos occasionally. Now in terms of trading, a three-step process to follow. Determine the trend direction to trade. So for example, if you're trading on the daily time frame, the minimum trend you should be looking at is the weekly. Or if you're trading the intraday like the 1 hour, then the minimum trend you should be following is the daily trend. Step 2, trade on the direction of the CCI 150 and fresh breakout from the CCI moving averages. And step 3, close the trade when the CCI 150 enters into the CCI 150 moving averages. I'll go through some demonstrations for each of these. So first looking at crude oil, this is US crude. On the monthly, we're bullish, but you can see there the CCI 150 is above the moving averages, but starting to turn down. But nevertheless, it's bullish. On the weekly, it's broken below the moving averages, so it's bearish, hence that pink color coding on the price chart. And on the daily, it's a fresh breakout to the upside as a bullish movement. So a bit of almost a sideways move across 3 time frames with a fresh breakout on the daily. And if you look at the daily and the 1 hour chart, we use the daily as a reference point. Remember, we only trade based on the higher time frame. So here, for example, if we're trading on the 1 hour, we use the daily time frame as a trend direction. So here you can see there the CCI 150 is breaking above the moving averages, and that's giving us a bullish movement, even though it's still predominantly below these trend lines on the price chart. But the CCI 150 is a key trend indicator we use, and I'll add these colors here. You can see there, so fresh breakout there on the daily. So if I zoom in there, you can see there we would have taken a long trade when it starts breaking on that daily time frame. That would have been around that point there, so you would have taken a long trade there. That's also bullish on the 1 hour time frame, and so far you would have been up a few points. And during this whole period on the daily, you would have avoided taking any long trades during this period. You would have taken short trades. So going back there, for example, on that candle there on the daily that coincided with this period back here, you would have gone short there, and you would have closed it out when the CCI broke into that moving average band. So you would have made a nice little gain on that drop there. Avoided going long or short during this period because, again, we're going short only during that period. And you would have taken another short trade at that point there when it broke below the moving average band. And you would have closed it out when it broke into that neutral positioning. Then likewise, gone short there and closed it out when it broke into that neutral positioning at that point there. So that's the basic strategy on entering a trade on the intraday time frame based on the daily. Again, you can do that trade if you're trading on the daily. Make sure you look at the weekly time frame as a trend indicator. So platinum's another metal. Some people are interested in trading. Again, on the monthly, it's bullish. On the weekly, it's bullish, and on the daily, it's had a nice big bull run as well. So there's no divergence to talk of as well. We look at divergence as well for each of these. Looking at the daily and the 1 hour time frame, again, we're demonstrating the 1 hour trading here, but you apply the same principles to different time frames depending on what your strategy is. So again, taking only long positions here, and that would have gone back to the 30th of April when it fresh breakout on the bullish movement. So go back to the 30th of April, that would have been around there. You would have taken some long trades during that little period there, closed it out there. You would have waited till that point there when it broke above again on a bullish movement. Remember, we don't trade when it's bearish below the CCI moving averages, nor when it's in the moving average band. So you only take trades when it breaks above that moving average band. Now in this case, we did have a bearish divergence, and in this case, let me just zoom into this one. If I draw a Fibonacci between that low and that high, if I zoom in to that point there, you can see there the minimum target range we look at as a retrace is a 23 to the 38% level, and it's actually hit it, just penetrated with those few candles there in that range there. So that's actually hit the target. So we always look at that and take notice of it. But still, you could have possibly traded that long positioning there when it was bullish. And again, a few more bullish movements there along those where the CCI breaks above the moving average band. And again, I've got the color coding there to demonstrate the break above the moving average band for each of those instances. Some of these could have been small stop losses, like in this case, for example, you would have gone long there, and you would have stopped out with a small loss there. You would have gone long there during that candle, and you would have closed it out when it entered that neutral positioning. Another long entry there, possibly a small gain or a break even, another gain there, and so on. So you get the idea with the trade. This would have been a nice little trade, and closed it out when it entered the neutral positioning there, and entered again there and closed it out there. For high grade copper, we're bullish on the monthly, bullish on the weekly, and bullish on the daily. So across the board, we're going bullish. So if we jump to the daily and the 1 hour time frame, again, more recently, you would have gone long during that period there, and that would have coincided with that long entry there on the 1 hour chart. Let me just zoom out to this. And that would have been the first day, would have been the 14th of May, and that coincided with this period back here. You would have gone long and closed it out when it closed into that neutral positioning on the CCI 150. Entered long again there, and that possibly would have been about a break even. And more recently, you would have gone long on that one there, and you're currently still in a trade on that one. Although you've got a bit of a shooting star there, possibly, so you may want to take profits on that. You do want to look at other opportunities to get out of the trade, possibly if you can see any signs of those. Next, we're looking at iron ore. Now, there's no CCI for the monthly, so let's call that neutral. On the weekly, it's bullish. Last few weeks there, you can see there the CCI is broken above the moving averages. And on the daily, we had a nice little bull run during that period there. It's broken down and had a fresh breakout above today as well, as of trading, or last night of trading. If we look at the daily and the 1 hour, again looking at that, let's look at this period back here from the 9th of April. If we go back to the 9th of April, so during that period, that you would have gone long. Let me just get rid of, I've got a Fibonacci here. That was a retrace. You can see there it almost hit it at that point there, rose a bit higher, and then eventually did break down into that range at that point there between below the 23% level. So let me just delete that Fibonacci. But in terms of going back to this period back there of the 9th of April, you would have gone long during this period, taken a few profits out of that neutral positioning, gone long again. Again, some of these might have been break evens, very small gains. Another gain there, and another gain there. And notice there was also that divergence, as I mentioned, that bearish divergence, lower highs on the CCI versus higher highs on the price, and eventually broke down and hit our target range there. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.